So the year is still fresh. It's a good time. I don't know about, all those resolutions and all of that for the year, but I know it's a good time to set your calendar, your investment calendar going, set it on at this time. But which way should you look when we look at the diverse opportunities or platforms available for investment? That's what we're going to do now, talking about investment strategy outlook for the year 2024 in Nigeria especially, but then also outside Nigeria. Now, joining us to have this conversation all the way from AfroInvest is Robert Obotunde. He joins us now you prepared this. Hi, Robert. Happy New Year.
Same to you.
Good to have you. So I see that you shared this with me earlier, and I guess I didn't want to be stingy, so I decided we share it with our viewers. So this year, first of all, when you look at the investment climate for Nigeria and Sub-Saharan Africa, I see you're really interested in Sub-Saharan Africa there.
Absolutely.
How would you describe it? I know we had a lot of interest rate hike, inflation, devaluation of currencies, and all of those affect investment climate. So how would you describe 2023 before we head into 2024?
Thank you. Very good questions, I must say. There are two themes. The investment climate is getting tougher, and then it's getting global. So those two things are very important for any investor who wants to really optimize returns in 2024. Now, I say it's getting tougher because globally, we are seeing a lot of risk factors coming up. And you just mentioned the biggest of them, inflation. In fact, if you ask me what was the biggest phenomenon in 2023 that affected the global economy, it was inflation. Inflation in the US, in the Eurozone, and look at the US, for example. That's an economy that would typically print inflation around 2% levels, peaked at 9.1%. The Eurozone, it was as high as 10.6 for,
towards the end of the year, we saw it take...
No. I'm just telling you the peak. For Bank of England, for example, it was as, high as 10% levels or, or thereabout. 11% levels, thereabout. Now, but we now started seeing significant moderation, I would say as well. Significant moderation. The US inflation, for example, that peaked as high as 9.1%, closed the year at 3.2%. So that is the basis for what we are looking at into 2024 and those things that would shape the investment climate in 2024. But let's not forget, it's getting tougher, but it's also growing global. Okay, so
you talk about inflation. I think you also have a slide for inflation in Nigeria. If we could have that also, inflation in Nigeria. Unfortunately, in the case of Nigeria, we do not see it going down. All right, so that's it, the one for Nigeria. And we see that this is at the end, this is October, yours stops at October. Absolutely. We see at 27 now, of course, we've gone past this one for November at 28. And we saw that, there was a little bit of tapering here. That was around February, June, October. But I don't think it really showed. Everybody was cash strapped and purchasing power had already reduced. And I don't think a lot of people...
So this tapering you saw was 2018, 2019. So the whole of 2022, we saw it creeping up and up.
So that's 2022
2023, 2023. Going into 2023,
have we peaked? Have we peaked?
Well, I wouldn't say we have peaked, because if you look at all the other pressure points, until we know what is happening to insecurity, we may not be able to tell how high food prices could get. Until we are sure what the exchange rate outlook is, we may not be able to tell what imported inflation would add to the CPI basket. And there are several other pressure points. Thankfully, we have global oil prices moderating. But even though it's moderating, exchange rate is an element in that pond price, which can also take it higher. As we speak, to be honest with you, I am not sure we're charging a market-reflective pump price for petrol as we speak.
The issue of subsidies is something we don't want to go into.
By the time that is done, you're going to see more pressure coming on inflation.
And that's why I wasn't yesterday. We had to have both the NNPCL and the private oil guys coming out to tell us, we're not increasing. Because if you do a normal calculation, you would find out that we are not paying for...
And that's where the problem is for a country like ours. You know, we all talk about what the issues are, what the problems we're facing, and how we need to get out of them. Government is struggling. I mean, look at the budget of government. They are practically struggling to raise the revenue. You know, we are leveraging on, finance minister says there won't be leverage on the central bank this time around, but we are going to still have to borrow.
But we already securitized how much for ways and means.
Yeah, so just think about that. So now, if all of those problems exist, I think that since we got out of subsidy, we should have just taken the bull by the horn and hold sway, so that we are not, you know, bedeviled by that conundrum. It's been with us for so long, and I just imagine that we could have taken it out completely out in 2023.
I think that would be really harsh. A lot of Nigerians will not want to hear you
so
say
let me
that,
tell you,
Robert.
I think the problem here is that we're saying it's harsh because we're doing one good thing, but we don't want to follow it with other good things. There are so many things we are still trying to pamper. All the problems that are facing the country, we are not taking them all in at the same time. And this is what is really needed, because Nigeria is like a country that has gone through a terminal disease, and you are seeing all the symptoms in inflation, in unemployment, in slow growth, and all of the issues that is facing the country. Now, if you're going to get us out of that system, there are hard drugs that you're going to have to apply. These drugs they can be painful. Some of them will bring with it a lot of signs and symptoms that you will not like. But if you shy away from taking those drugs, we are not going to come out of that terminal illness. And that is the problem here. And
all of this obviously affects the investment climate.
Absolutely.
If we could have, the one we had before the slide, looking at the sub-Saharan investment environment, looking at Eurobond. Yeah, so there you have it. I don't know why you brought up the 10-year Treasury yields. Perhaps that's something that we should look out for this year. And we also see right here Nigeria and BRICS market.
Absolutely.
I've not been hearing a lot about BRICS these days.
So what's going on here is the 10-year yield is the benchmark for tracking most dollar-denominated assets. Remember, Eurobonds are bonds in the sub-Saharan African, issued by the sovereigns in the sub-Saharan African market, but are denominated mostly in US dollars. Some of them are euros. We don't want to go into the history of how Eurobonds came about, because originally it was issued in euros, but as we speak, it's mostly in USD. So Nigeria, for example, is in the Eurobonds market. I think we have about $15 billion worth of Eurobonds outstanding in that market. Now, but that market is not really looking at Nigerian inflation. What it's really looking at is US 10-year yield, because that's the benchmark. So what you see is that, we talk about US inflation peaking and then moderating. That moderation is directly reflective on the pricing of sub-Saharan African market. And by the way, in the last 3 years, since COVID, after we came out of COVID in, 2021, you've seen new pressure point brought about by inflation, which presented a lot of opportunities in terms of asset prices. Asset prices came off from their peak and they dropped so significantly. And in 2023, towards the end of 2023, started seeing significant recovery, but there's still more room for benefit in 2024.
So are you saying it's a place that investors could?
That's where the gold is. Let me say one of the places where the gold is in 2024.
In this case, the thing is, it could be a shield for you, a hedge against Nigeria's inflation.
Definitely. It shields you, hedges you. And you have a number of dollar-denominated funds regulated by Securities and Exchange Commission. You don't want me to market myself here. AfroInvest has one there, that you can invest in as little as $500, $1,000, you can put. And these are, should I say, relatively safer investment opportunities that also prevent or protect you, so to speak, against inflation that may be brought about by exchange rate depreciation.
The way you said $500, $1,000, it tells me that Robert, you're one area to look at. But what are the other?
But speaking to that seriously, Nigerians have a lot of money that we throw around.
Really?
$1,000.
So all this cry for shortage of dollar is artificial?
Well, to some extent, it is, because in an environment that is uncertain in terms of where the inflation outlook is, you know, dollarization is one of the, should I say, symptoms that you find, because everyone is trying to protect, and people are rational. You know, the problem is that government always thinks that people should not do certain things because, you know, for patriotism, so to speak. But it's a market. You know, as a matter of fact, speculative activities is what drives every market that is, you know, really thriving. So in the foreign exchange market as well, speculation is allowed. What the government needs to do is to ensure that you have a market process that prevents speculators from, damaging whatever efforts you are putting in place to stabilize the economy. But that you will not have speculators, we should forget about it.
All right, so what are the other windows available for investment? So
investment opportunity in this, I was saying something about, it's getting tougher and it's getting global. The tough part of it is that, you need to be discerning. You have to be an investor that can really read in between the lines. You have to study trends. You have to study, there are a lot of things that we cannot bother an average investor out there. So one of the things you must take very seriously in 2024 is that have your investment partner. Those that have done the job, they've done the dirty job of understanding the times and season, if I can put it that way. Because we believe that 2024 is a season for reaping the returns on your investment. But in doing that, you will have to be strategic. Strategic means that you must, amidst the bouquet of portfolio of products available, you have to design as to which one you're going to pick. Then I mentioned the word global. Global in the sense that if you stick to Nigerian instruments alone, Nigerian instruments here will be, you're either investing in a placement or with a bank or in a money market fund that is naira denominated.
Our stock market is doing well.
Well, that's what I'm saying. Or you're investing in the stock market. But in 2023, we had an impressive performance. We think that we can still build on that. And by the way, my fund was the best performing in the market.
There you go again, telling yourself, I'm going to charge you, Robert.
But in 2024, we can build up on that momentum. But we are saying that you cannot just even stick to naira investment opportunities alone. Now, you were just talking about sub-Saharan African market, for example. There are other opportunities out there that you can, But like I said, you have to partner with because some of us don't even know how to go about this investment. If I want to invest in SSA,
we have the money, we can buy the services.
I mean, that's what I'm talking about. So opportunities will exist, particularly in the fixed income space, because both locally and globally, the fixed income space had been at the receiving end of higher inflation, and interest rate hikes from the Central Bank of Nigeria, the Monetary Policy Authority, and other, monetary policy authorities, systemic monetary policy authorities, globally. So, but in 2024, everybody is singing, bring down the interest rate, bring down the interest rate. The implication of that is that if you are invested, and I say, 2023 was the best time to invest, but January this year is still a good time.
It's the next best time.
Yes, it's still a good time to invest. You understand? Because the opportunities
are there. Now that, as you also talked about the issue of interest rates, and we see the dollar gaining, we see talks about reduction in interest rates in the U.S., which we know controls the dollar. That is more of a global currency. Yep. How does that affect the entrance or, profits from the fixed income?
Well, so, the dollar market is such that, the government will always talk about you can't dollarize the economy, but some investors earn in dollars, right? So, you have people staying in this country and earning their funds in USD. If you have dollar investment, perhaps this is a time to deploy. And, you don't talk about exchange rate risk if your earning is, in dollars. And if you have your earnings in dollars, you can put them into investable use that will give you something better returns than you will even earn if you were to invest directly in the United States or any of those countries where you have, the foreign.
And now you have a lot of apps that allow you to go across borders. I guess that's one of the things you meant about.
Yes. You don't want me to market myself, but I would have told you one. So I won't say it.
All right, Robert Omotunde, Chief Investment Officer at AfroInvest. Thank you so much for your time. And
thank you.
Thank you for coming. All right, so the program is not over yet. What we'll just do is take a break. When we come back, talking about investment opportunities, the market, and a whole lot more. You want to stay here on Business Incorporated.